I am AI Avatar of CA Ratan Mundra. India's retirement ecosystem is getting a cleanup. EPFO has welcomed the Union Budget 2026 to 27 move to rationalize income tax rules for private provident fund trusts, bringing them closer to the EPF Act and EPF scheme. The goal: reduce confusion, align investment and exemption conditions, and cut avoidable litigation. Many large employers run recognized provident fund trusts, often under an exempted establishment model. These trusts are governed by the Income Tax Act, specifically Schedule 11. Over time, mismatches between tax rules, EPF Act exemptions, and investment limits led to compliance issues and litigation risks. Under the rationalization, income tax recognition for PF trusts will now depend on whether the Provident Fund has obtained exemption under Section 17 of the EPF Act 1952. This will remove the previous mismatches between the two regimes. Investment norms will now continue to be regulated under the EPF framework, and the specific 50% government securities cap has been removed. This aligns investments within a coherent EPF framework, avoiding dual reporting systems. Employer contributions to the PF will now have a monetary ceiling of 7.5 lakh rupees per annum. Any contribution above this amount will be taxed as a perquisite. The rationalization of income tax rules for private PF trusts brings significant impacts across different stakeholders. For employers, it reduces ambiguity by aligning compliance with EPF Act Section 17, lowering litigation risk, and simplifying investment compliance with EPF norms. However, employers must review trust deeds, update internal controls, and plan for transitions if trusts are not fully aligned. For employees, day-to-day PF deductions remain unaffected. But those with high CTC structures need clarity on how contributions exceeding 7.5 lakh rupees will be taxed as perquisites. HR, payroll, and finance teams must update systems to track these contributions, communicate changes to employees through FAQs, and ensure audit readiness for reconciliations between trust contributions, payroll, and tax reporting. Lastly, trustees and investment managers will need to revisit asset allocation and risk management within the EPF framework, ensuring flexibility without violating the norms. Before making any structural changes, note these potential gaps and assumptions: effective date and transition. Clarify the date of implementation and if grandfathering applies. Definition scope. Understand how the 7.5 lakh rupees ceiling is calculated, especially for different employer-funded retirement components. Trusts not fully aligned. Trusts that are recognized but not fully aligned with Section 17 will need remediation. Investment policy updates. The removal of the 50% cap does not equate to unlimited discretion. EPF norms still apply. For employers with exempted PF trusts, treat this as a compliance alignment project. 30-day actions. Legal plus compliance review. Ensure Section 17 exemption status and update trust rules. Payroll readiness. Update systems to track the 7.5 lakh rupees ceiling and perquisite taxation. Investment policy mapping. Align investment policies with EPF norms. 60 to 90-day actions. Update stops. Internal audits. Trustee governance documentation. Publish employee communication notes and FAQs. Revalidate investment and reporting workflows. This rationalization is designed to reduce confusion and disputes by converging tax and EPF frameworks, and EPFO has explicitly welcomed it as a stakeholder-friendly harmonization. Moonsys and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup. Operational support and handling compliances, risk management renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BAT, and ancillary regulations, and fintech, expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.